नहीं क्या ही रिस्पॉन्सिबिलिटी। मैंने देखा है आजकल के बच्चों को बिल्कुल भी स्ट्रेस लेना ही नहीं है भाई।
मैडम फांसी लगा रहे हैं, स्ट्रेस स्ट्रेस लेते हैं, इसलिए बंदे ना आजकल टेंशन कम ले रहे हैं।
Good afternoon, all. We'll start in another 5 minutes.
Prashant sir, are you able to see my screen?
Yes, yes.
Okay, thank you.
Anuj sir, we start. It is already 4:05. So good afternoon, everybody. First of all, sincere thank you to all our partners and MFDs for taking out time to join us today. We truly value your continued trust and partnership with Taurus Mutual Funds. We understand that in today's dynamic market, your role becomes even more important to guide investors with the right products and the right advice. And to support you in that journey, today's session will be focused on giving you clarity, conviction, and confidence around our Taurus Large Cap Fund. Now, rather than hearing it from me, it's always best to hear directly from the person managing investors' money. It's my pleasure to introduce our fund manager, Mr. Anuj Kapil, who brings deep market experience and a strong focus on disciplined quality investing. Anuj sir, the forum is all yours now.
Thank you, Prashant sir. Thank you so much, and lovely to have a conversation with you all. And I hope my screen is visible to each and everyone. If there is any problem, anybody can say in the chat box. Okay. So before starting a presentation, I'm thankful to you all that you have joined in your in the current situation, the current volatile situation, and as a team member of a fund management team of Taurus Mutual Fund, uh, I like to present the most of the facts that we are working on, how we have uh, assess the Middle East crisis and what will be the impact on the sector, how the sector we are positioning ourselves, how what is the rationale behind our portfolio picks, what is the market theme that we are looking for. These are the main topics that we are going to deliver today, and mostly it will be on a very fact basis webinar. So I'll start with the our fund introduction. The fund is a Taurus Large Cap Fund. It's an open-ended equity investing predominantly in the large cap stock. At any given point of time, above 80% of the AUM has to be deployed in the large cap stocks. So benchmark is BSE 100 total return index. So it's a very old fund, and I've joined Taurus on November 2022. I have been given the responsibility for handling Taurus Large Cap Fund on 13 June 2023. So by the June 2026 came, it will be going to be a 3 years while I'm managing this fund. So our Sharpe ratio is by the end of Feb month is 0.92. Our standard deviation is 13.26%. Our beta is less than 1. Our portfolio is less than 1. Our Sortino ratio is 1.27. So what is these ratios are implying, and how do you understand these ratios? That a basic is when Sortino ratio is higher than the Sharpe ratio, it indicates that an investment's volatility is primarily driven by large positive gain rather than negative losses. This means the investment has a favorable and asymmetric risk profile, and it will have the much higher upside potential with lower or controlled downside risk, which is often superior for investors who are looking for downside protection. So whenever you are selecting the fund, you can see that Sortino ratio, it should be greater than the Sharpe ratio. So our AUM is by the end of Feb month. You can visit our website. You can download our fact sheet. You can see that our AUM is close to 50.71 crore. So basically right now, we have invested around 83.62% in the large cap. In mid cap, we are 3.18%, small cap 2.25%. So the basic, what I call that, how we are going to on this webinar is to start that how we are assessing the Middle East crisis, what is going to be an impact on sectors. This crisis will have what kind of impact, whether it's a positive, whether it's a negative, and how we have selected the stock, what is the rationale behind we are selecting the stock, what is the process behind running a portfolio management, and how the process has delivered a good returns or a better ranking and better risk profiling also. It means that you are getting a risk adjusted return over a period of time. So I'll start with the basic thing because everybody would have wanted that one should tell us, a fund manager or a research analyst should tell us that how we are placing ourselves in this current situation, a war situation or LPG gas situation. So let me start. So let's understand what is the Middle East crisis we have assessed so far. So there is a Iran and Israel tension. Everybody can see nowadays on news channels and everywhere. You can see the map. There is a small opening where which is called Strait of Hormuz, from where the vessels are coming, oil and LNG vessels are coming, and they are all the. That is a very narrow passage which can be controlled by the geographical presence. If some Iran is there, I request everybody to please put themselves on mute. Prashant sir, can you identify someone?
Yeah, I'm just doing it. Just give me 2 minutes. Yeah, you can continue.
So, Strait of Hormuz carries around 20% of the global oil supply, and India imports is around 85% of crude needs. And now, what is happening that the landed cost is around $20, which is the oil is coming from Russia and anywhere from Strait of Hormuz is landing on India. It used to be $4 or $5. The landing cost, now the landing cost has been increased to $20. So for every $10 per barrel rise, there is a 14 billion additional import bill to us. So if the Brent crude is around, if you understand that if the Brent crude is around, let's say $100, then there will be and you can add the $20 premium on it, then the cost is around $120, and it's an additional 28 billion import bill. So you can understand how the insurance has been increased. Right now, around $6 to $7 has been taken for the insurance purposes, and all other costs already has been increased. Also, the oil producer is also demanding the premiums also. So there are many things which you can see, and there are many ways where you can access the oil from somewhere also. So in that scenario, you can see that one is Strait of Hormuz and another is Houthi attackers, which is forcing vessels via Cape of Good Hope. So there is a delay of 10 to 14% delay, which can again give rise to 20 to 25 rise in freights. So how we are going to go through this, how this war is impacting ourselves. So they are sectoral winners also, they are sectoral losers also. So most of the OMCs, most of the city gas distribution companies, these are the LPG and LNG companies, they are going to have a very tough quarter for the quarter 4 and quarter 1 also. Quarter 4 would be a mild one because it is the 2 months has been passed, but quarter 1 will be the hard one. So what we are is right now that how portfolio positioning we have done from last 3 months, we have 0% exposure in direct Middle East and exported domestic focus. So we have mitigated our risk also. So we have a position in ONGC and Reliance, which are into oil and gas, but they are onto the upstream. So upstream will be benefiting and downstream will be the loser. So let's understand that how these things, how much is the percentage of oil flow or LNG or LPG flow will come across the globe. So this is dependency on Strait of Hormuz. So India's world dependence on the key hydrocarbons. So India's total consumption is 54.4 MMT for LNG, LPG for 31 MMT, and oil is 5.5 million barrel per day, of which you can see how much has been imported, and there's a dependency of LNG of 49%, LPG 68%, and oil is 87%. So dependent imports via SOH, let me call the Strait of Hormuz as SOH. Then imports via SOH is around 16%, which is 60% of India LNG imports, and LPG is 90% and 54% is. So you can see that how many inventory days we have within India. For LNG, we have 4 to 5 days. For LPG, we have 15 to 20 days. For oil, we have 40 days. So in last 10 years, the capex has been done from for oil, it has to be 7 to 10 days. The oil inventory has been increased from 10 days to 40 days. Let me tell you that capex for doing the to building an inventory for the oil or a gas, it requires huge capex. It requires a long period of time also. So coming to the table 2 also, India's key oil products and export imports, you can see the oil production is now is around 30%, consumption 270, export is, you can understand that we are mostly importing. So that is how we are getting more and more things on the importing side, and it is going to be a very bad situation overall. So let's assume that how we are going to place, and you accordingly you have seen that there is a much volatility in the market also regarding taking a pressure on the oil and LPG and LNG supply. So what is the impact going to be on which sector? So let's understand there's a air traffic fuel. So there's an impact due to Iran war on twofold. So it is directly the ATF prices. Airline fuel is directly linked to crude oil prices, and ATF accounts around 35 to 40% of total cost of airline industry. So if there is a 10% increase in the air fuels, then you can understand that airlines EBITDA will be hit by 15%, which is very huge. And another airspace, the airspace which is shut down due to the war. So in the Middle East, so there will be a rerouting also. Then there will be a long haul of the flights. Then there will be a long usage. There will be large usage of the airline fuel. So that would also impact the earning. But how they are going to impact the earning, that is, I need to calculate, because it will take around another 15 days to get the data on the set. For alcohol and beverage industry, you can see that their packaging cost has been increased. So the glass bottle cost has been increased. Glass manufacturing relies heavily on natural gas, because you have to fire the furnace and you have to sustain the gas price. So you can see that overall, over a period of time, there might be chances that may it beverage industry. Sir, anybody who can please, can they please mute their laptop?
Yeah, I have muted it, Anji. You can continue, please.
Okay. Okay. Thank you, Prashant. So for the automobile industry, you can see that urea shortage can impact the cargo movement. So in India imports around 50 to 60% of technical grade, we call it TGU, and then there is a DEF, that is diesel exhaust system, which is injected into exhaust stream for a diesel vehicle, and it will also give a better mileage. If urea shortage can impact the cargo movement, then there also the companies which are doing there companies who are like heavy duty trucks and buses and large diesel passenger vehicle, typically which is 2000 liter above engines, are equipped with mandatory engine interlock system. So their cost will also go high. Their usage costs will also go high. So increase in the crude prices, you know that in domestic tire manufacturing, tire is crude oil derivative is the main raw material for manufacturing the tires. So carbon black, these are the refining products which comes out of when you are refining the crudes. So whenever the crude is going to be on the higher side, it has been doubled in last, let's say, within like 20 days. So additionally, you can see that natural rubber prices has also been rising. So there will be inflationary pressure and there will be logistic costs also. So their EBITDA can also hurt because it is not easy to pass on the cost on the car sellers or any who is vehicle manufacturer or the customers who are buying the new tires also, because it is going to be expensive. So generally, it's a very competitive market. Margins are a little bit on the price, relies on the price movement. Also, when you can come to the OEM, which is original equipment manufacturers, so they also need to do forging and casting, and they are highly vulnerable because they need a lot of gas supply. And due to this disruption, their independence on the gas-fired furnace for heating process has been installed. So recently, government has told industry to reduce the capacity of gas utilization by 20%. If somebody is using 100, let's say 100 gram of gas, now he has to use around 80 gram of gas, because that 20% of gas has to be allocated to the domestic public, to the public of India. So it is a normal for the normal household purpose. So there will be a disruption in auto component manufacturers, tire industry, and automobile industry. Even in infra spending, you can see why, with government likely to be a majority of the brunt of elevated oil and gas prices, India government finances for FY27 would be challenged, because when the finance minister made a budget on 1st February, they would not have thought in their mind or in their dreams also that this is a kind of crude prices will be. So they have must done the contingency on, like, if it is a $62, then it can go up to $85. So accordingly, they have done the contingency. But it has now soared past above all that. And every $1 barrel increase in the oil prices impact the government revenues by 100 billions. So you can average it out, you can calculate, and you can assume that there will be a impact that could lead to an impact of 2 trillion rupees. The government likely to balance between a higher fiscal deficit and lower capex spending. So one can see that projects, the infra projects, the projects which is based on our infrastructure will be getting delayed by 1 quarter or 2 quarters. Oil and gas, you can understand that upstream oil and gas producing companies benefits while downstream companies suffer. So OMCs have a limited pricing power. So generally, upstream is like you are producing and you are extracting the oil. And downstream is like you are refining the oil and you are gaining the marketing gains over it. So I think OMC would be the worst impacted companies. And of the Qatar export facility having a 77 million tons per annum, 12.8 million ton per annum, that is 17% of the total, has been severely damaged, and definitely it will remain shut for 3 to 5 years. And same goes with the Iran also. If their Iran facility has also been damaged, so it will take around 3 to 4 years to get up on their knees and to start exporting oils. So doesn't impact India directly, as trains damage was severe Europe and China. However, this can lead to the tightness of spot LNG prices market. So we need to understand that how this things will work and how things there has to be. We're looking forward to it. So for the upstream, you have the companies like ONGC and Oil India. Their EBITDA positively impacted by 11 to 12%. There is a fear of government announces windfall taxes, just like when they have announced between Russia and Ukraine war. However, probability is limited with the ORDA Act. So there might be possibility that ONGC, Oil India, like companies will deliver a better quarterly result, and they will continue to uh, uh, better result if the crude oil persists above $120. So why I am saying $120? Because if you say India crude basket was for the December quarter was around $62. Right now, India crude basket is around $142. So what we are seeing, a Brent crude price is different, and what we are getting is totally different. So there might be escalation. There might be increase in the petrol and diesel prices today they have done around 2% increase on the premium price petrol prices, but I think over a period of next 3 to 4 months, after 2 months, because the election is also there, so you will see that price increase will also be there. Also, the companies like HPCL, BPCL, and IOCL, their EBITDA negatively impacted by around 50, I think 50, 44, and 30%, because you have already seen in last 3-4 days how their stock prices has in the downtrend. Assuming there is no change in retail petrol and diesel prices, in absolute term, $5 per barrel impacts the combined annualized EBITDA for OMC by rupees 450 billion. So companies like City Gas Distribution, like IGL, MGL, and City Gas Distribution could be negatively impacted by rupees 2 per SCM. That is 15 to 30% of EBITDA for City Gas Distribution. Assuming no pass through of price hikes, although some prices hikes would likely to happen. So every dollar billion per barrel incremental GRM contributes 2.5% to Reliance EBITDA. So having a Reliance in the portfolio, having a ONGC in the portfolio is definitely will lead to give you some upside also, and it will also take care of the downside protection. Of the 18 MTPA of the Petronet's volume, company gets around 50% for the Middle East. So every MTPA loss of volume impacts company EBITDA by 3.5 billion rupees. So that is how the upstream oil and gas companies will make better growth, will deliver better results for the Q4 and Q1, and the downstream companies will suffer. So fertilizers, you can see that fertilizers are the things that you can understand that there is a gas and feedstock stress. So urea risk is more about the gas availability than a finished imports. So LNG and gas curtailment is already leading to the lower utilization and advanced maintenance at some plants also. So as per the research issued by the National Center for Agriculture, Economy and Policy Research, we require 18 million tons of urea till August 26, 50% of which is required as base dose and 50% of used in the split doses. So farmer starts buying only towards mid-May. Assuming a 20% reduction in monthly urea production, we should producing close to 10 million tons in the next 5 months. Current stock as per the government sources is 6.2 million tons. This leaves a gap of close to around 2 million tons that needs to be imported. And if that needs to be imported, that will be on the higher cost. So fertilizer production is at risk, especially urea. However, can be imported from Russia through Suez, not Strait of Hormuz. Currently, it supplies over third of MOP and 10 to 15% of urea and diammonium phosphate. So the key risk is a managed supply squeeze, no immediate scarcity, and the key risk is sulfur, which is import dependent and Gulf concentrated. Makes it more exposed to input cost inflation and raw material availability than to finished product shortage. So margin risks remain if the disruption persists. And same goes before going to the consumer discretionary, I would like also tell that there will be a pressure on the plastic pipes also. So margin should ideally be stable. Generally, RM prices gets passed on 1:1 and its benefits are visible either through higher than normal growth or inventory gains. But PVC supply disruption or significant price hikes could impact volume growth, particularly in the agri segment. So plumbing segment should see less volume impact, but may still experience moderate volume disruption. So India largely import PVC from Far East and US. So while logistic disruption or gas availability issues in this season may cause delay, it should not be a significant long-term issue. So pipe companies with better inventory can hold out for a while, but mid to late April could mark the start of resin supply constraint if disruption persists. So this is the whole scenario right now, what we are looking for. So let's see. So far we have spoken on Middle East crisis. I do not want to go further and don't want to make it a bore kind of a presentation. Any question so far? Let's make it a interactive session. If anybody wants to ask any question, so I am ready to answer on Middle East crisis and how we are managing it.
Hello, sir. Good evening. I have one question. Till now, the government is claiming that everything is okay with India. I mean, when it comes to the supply and all, they are able to control the diesel and petrol price. So, what is your take on this? Means how long we will be able to sustain in this situation?
So, Tarunji, thank you for asking the question. Sir, my point is here that there is a limited supply. So if you see there is 8 ships needs to be come, but out of 8 ships, 4 are come. 4 ships are come. So let's assume there will be a constraint, and there will be, and the people literally after Corona, people get into the chaos story. So everybody wants to hoard the LNG or LPG cylinder with them, and something has gone. In my home also, I have a pipeline. IGL Connect. I have the gas comes to the pipeline. But somehow my family is very concerned about the let's have a cylinder. As long as it is coming, there will be, we should not be manufacture a chaotic situation. So yes, there is a constraint. So constraint is with mostly, if you see, there is a street vendors who are running their street cart on the cylinder. They are brutally punished with this thing, and there is some sect also which is not having any kind of what you call cylinder supply and all this thing. I think the dollar, the crude is already at the point. It cannot, we cannot afford to have it on these levels. Now the crude basket is close to like $140. So everybody was saying $100, beyond 100, up to $100 or $110, there will be no effect, because now our economy is strong. And previously we used to import 100% of the oil. Now we import 85% of the oil, because we are blending ethanol on in our fuel supply. But the point is that at that time, the nominal GDP was close to 14% when this happened in 2008 also. Now, our nominal GDP has been increased at that percent. And now that our imports are low, the situation is little bit handy. It can be handled, but I think it will take time. It is not, we should not make any assumption that this war is going to be finished tomorrow, because you see, when Russia and Ukraine, they have started the war, everybody was saying यार खत्म हो जाएगा, अभी खत्म हो जाएगा, 1 महीना में रशिया खत्म कर देगा, 2 महीने में खत्म हो गया. अभी तक उनका वॉर चल रहा है. Nobody is talking about it now. So I think the supply will be constrained for let's say for 10-12 days, and then it will become a normal supply, because our domestic production is also there. It's not like that we are importing all the things. So we have Reliance, we have other percentage. So basically 20% is what we are lacking right now. And I think it can be handled. And I don't know when the war will stop and how it will be pan out. But the point is that the resources which has been destroyed, it will take time to rebuild. So that scenario will be there. So momentarily scarcity will remain there. But as I've told you, Q4 will be somewhat harmful. Q1 will be the harmful on the higher side also, because of all the effect will be come in the place, because you cannot increase the price for the gas and the petrol and the diesel. 5 state में election है आपका. You cannot afford to lose also. So I think, but this is my assumption. Maybe anything can happen. But I think because of this, they will have the huge losses out city gas distribution or OMCs, and upstream will be making a decent amount of money. I'm not saying they're making a huge profit, but decent amount of money. If they are not going on the upside, they are not going down like OMCs and city gas distribution.
Thank you, sir. Thank you.
Thank you, Tarunji. Anybody else? If you want, I can continue further.
Yeah, we'll continue.
Thank you, Prashantji.
Good afternoon, sir.
So we are basically banging mostly on the consumer discretionary.
Anuj, just a minute. Somebody had a question.
Yeah, please.
So somebody unmuted and wanted to say something.
Sir, actually, sir, there is one doubt from here. Actually, sir,
बोलिए.
सर जो स्कीम है इसमें मेजर सेक्टर फाइनेंशियल सर्विसेज का जैसे पोर्शन इन्वेस्टेड है अभी ज्यादा इस स्कीम में, तो क्या ये
जी.
इसमें क्या कुछ एलोकेशन चेंज होगी, मॉडिफिकेशन होगी एनर्जी की तरफ?
मैं
अभी वो सिर्फ
इसी स्लाइड के बाद से मैं वो शुरू कर दूंगा. आपको ब्रीफ टू ब्रीफ बताऊंगा. आप एक चीज बताऊंगा. मैंने ये स्टॉक भी क्यों लिया है वो भी बताऊंगा. ईच एंड एवरीथिंग मैं आपको बताऊंगा. आपके सारे
Okay.
क्वेश्चन आंसर हो जाएंगे, उसके बाद भी क्वेश्चन रहेगा। एक बार आप मेरा पूरा प्रेजेंटेशन देख लीजिए, अगर आपका यही क्वेश्चन है,
यस सर।
ठीक है, मैं आपको बताऊंगा सर। Yeah. So we are more tilted towards the consumer discretionary space. From last 3 months, 4 months, we are building our portfolio, and that is how we have improved our ranks from like 6 months back. On a 1 year basis, we are 27, and we build a portfolio assessing there will be kind of a geopolitical political risk, but we are not. I must tell you the truth. We are not able to comprehend कि ऐसा होगा कि there will be supply shortage and all the things. But yes, we were invested in IOC, and also we booked the profit and all the things. So we believe that India's private consumption is at 50% of the GDP, in urban consumption growing by 8 to 10% in the value terms. Your per capita GDP in 2000 was around $442. Right now it is $2,800. So the urban consumption and the rural consumption, and there is a presence of digital commerce. There are platforms which have increased the per capita income crossing 2,700. So as now people have gone up from roti kapda makan. Now people are going towards the leisure, luxury, wellness. They are moving to the all the things. So they want to enjoy they want to spend, they want to save also, they want to spend also. So that is the consumer trend that we have seen over a past of time. You must have seen that over a period of time, people wants to buy a car. Having a car was a luxury. Then there is a trend come that having a sedan car was having a luxury. Now the trend has come, is right now running up when there was Scorpio came in the limelight. Then you need a SUV at home. So now people are mostly buying the SUV kind of thing, the over a period of time. So we used to have Zomato also. We booked a profit in Zomato. We uh, uh, built a position in Titan. We built a position in Timex also. So over a period of time, we understand that there is a requirement that mostly people are not spending money on buying soap, oil, salt, and pulses and all the things. They are buying the luxury. They want to change the phone. They want to have a good looks. They want to have a good clothes. They want to have a good shoes. Okay. And now the credit is available on the phone also. Okay. If you want to have a AC, you can have a AC at home. So by putting a like 1,000 rupees, 2,000 rupees, you can avail the AC. You can avail that washing machine. You can have a big TV in your house. You can have many things in your house. Just a moment you can spend through the credit limit. So I think now we are shaping out like we want to go. We want to go out. We want to eat out. If we do not want to go out, we do not want to make food in a home, so we can order. When we are ordering the food, then we are not spending on going out. So where our petrol is not bill is not rising. Our parking ticket is money is not utilizing. We are not going to wait for very long when the restaurant are filled. So I think that is the consumption over a period of time. So you have, if you see from last 3 years, all the two-wheeler sales are picking up, and they are growing on the number also. People are now willing to have a expensive watch. Now the watch category for buying median has been increased from 1,000 or 1,200. It has been increased to 5,000 to 5,500. So lot of new pictures are coming. People are getting crazy about the going to the cinema now. They have fed up while seeing the OTTs at home. So they want to go and they want to enjoy the cinemas. Even if you can look like 4 or 5 months back, there is a cartoon movie has come. It's not a cartoon movie, it's a cartoon based religious movie called Narsimha was there. The Narsimha has made a good profit. Then their other films made a good profit. Then Kantara happened. Then Dhurandhar happened. Then their list of uh, companies which are, the list of movies, blockbuster movies which are in the line already. So people, we have to see that how people are changing their consumption trends. So we need to understand that what companies are there. So even ITC was in shock due to taxes implied by the government, but they have already passed down around 80% of the cost to the customer. Yeah, 12 रुपए वाला सिगरेट जो था 20 रुपए का हो गया है, 18 वाला आपका आई थिंक 26 रुपए का होता है. ऐसे ऐसे they have already transferred the cost escalated by the taxes. So we believe that over a period of time, ITC would have a 7 to 8% volume glitch, but as on they pass on the cost, so there will be a shorter 1 or 2% of volume glitch over a period of time, and ITC will back on the numbers. Accordingly, we have Varun Beverages, we have Titan, we have Indian Hotel. You have said that people are going for the luxury. We have PVR Inox, we have Maruti Suzuki, we have M&M, we have Dixon. So that is how we build a rural consumer recovery. And also we are not having any other FMCG stock like Marico, Dabur, HUL. These because accordingly, due to these higher oil prices and disruption in gas supply, that will affect them, their EBITDA by like what do we call, by 5% to 7%, their EBITDA will be impacted. So also this is the preferred topic, gold and silver. So we believe that gold has been, you have seen the metal belt down yesterday also, but we see that there could be a retracement back to like $5,000 and then it will go down further. So what we believe that metals have already done it. People have accumulated metals. Economies has accumulated metals like anything. Now they are selling the precious metal to accumulate the oil. So you can understand there is a complete shift of assets, complete shift of power dynamics in the gold and silver supply. Also, silver is now become it's so much expensive that all the solar companies EBITDA is hit by anything. The silver cost was used to be 4 to 5% while making a solar panel. Now it has been gone up to roof. It is now close to like 23 to 25%. The copper used in the transformer is around 30%. Now the copper has already been doubled over a year. Now their cost has been in the manufacturing cost of copper has also been increased. But how we are benefiting by gold upside or downside, we need to understand. So Titan, we are holding Titan. It's the largest organized jewelry retailer via Tanish. Elevated gold price boosts jewelry ticket size. It is a consumer trend. Whenever there is a price on the higher side, people want to buy the higher average selling products. So there they will be hiring. Previously they will be buying around let's say ornament of 50,000 rupees. Now now the ornament will cost around 1 lakh to 25,000 rupees. So there will be a better EBITDA over a period of time. Solar industries. So solar industry is also like they're into defense explosive, and you know that silver bearing ores, it will be required in the manufacturing the explosive and all the things. So lower silver prices will definitely improve the EBITDA of solar industries. Grasim is partly from it's it's a holding company, but they are holding Ultratech Cement, they are holding Birla Opus Paint, they are also holding mining company also, which are going to in the silver mining and all that. So broader theme is this, that we are positioned ourselves in a commodity sector like with the benefactors of those commodity stocks, not directly into the gold and silver, because it becomes a very uh, uh, very risky while your asset has been grown multifold, like 2.5 times over a year, and silver has crossed like 4 times in a 2 years. So it is very difficult to assess the situation, because if you have a huge upside, you should be ready for the huge downside also. So we have to ascertain that how we should position ourselves. So red, just a moment. So red demands the underweight, and blue indicates the overweight. We are overweight in healthcare. We are overweight in FMCG. FMCG, we have a concentrated position in ITC. In reality, we have DLF. You guys know that Dubai and UAE consider to be a safe haven for HNIs and ultra HNIs. So they go and they buy the premium property. Now it is not, they have understood. And now the trend is coming back that they want to have a luxury residences in Mumbai, Delhi and NCR. So our position is only in DLF, where we can see that their execution is superb. Their rental income is superb. Their rental yields are superb. Their delivery, they promise the delivery, and their maintenance is also good. As I can say that because we are Gurgaon-based AMCs, we have seen a lot of DLF projects. If you go to the any 25-year-old DLF building, you will say that it is a like 5-7 years old building. So that is how they have maintained their building. So we are bullish in capital goods. We are bullish in chemicals. We have chemicals like solar industry and Linde India. We are bullish in telecommunication. We are holding only Bharti Airtel because we think that in FY27 there will be a rise in there will be a hike in the uh, these what your cost that they are charging. So so ARPU will increase, average revenue per user will be increased, and the cost they are now there will be a hike in the cost of mobile utilization. Consumer durable, we are bullish. We hold Dixon, and power we also hold Power Grid, construction material Grasim. So that is how we are not taking much of chances. So you can see construction material, we are holding only Grasim. We are not holding any kind of cement companies, because when you are manufacturing the cement, you will use the pet coke or a fuel to burn the furnace. So there will be increase in the multifold increase in the pet coke prices. There will be increase in the coal prices also. So we have on the consumer side services, we have Indian Hotel with us. In oil, gas, and consumable fuels, we have Reliance, we have ONGC, and we have Coal India. So we have reduced auto exposure also. Construction, we are not holding L&T from last, I think 3-4 months. We are not holding, and generally L&T holds 37% of their order book in the Middle East. So you have seen that already L&T has been corrected for 4100 to I think 3400 levels. Metal and mining, we are not made any kind of, we have booked the profit. We used to hold Jindal Steel and JSW Steel. So we booked the profit. We used to hold the sale also. Financial services, the benchmark is right now 35 to 54%. But we have a concentrated position in across banks, private banks, NBFC, insurance. So we are monitoring the situation, and accordingly, right now the Nifty Private Bank is available at 2.15x of price to book value. If given a 8x to 9x leverage over a period of time, I think you can have 17 to 18%. Let's say, let's make it more conservative. Let's have 15 to 17% of ROE over a period of time. Remaining, the return on asset should be 2%. So, one of the best bet for me was the IT, that we have a very underweight in the IT from last 3 months, and we are only holding HCL Tech. We bought TCS as a tactical position, and we booked the profit also. But right now the position is where we are very little on the IT side. But now all the IT companies they have below their 15-year historical valuations. So the margin of safety in the IT sector is now very, very attractive. So we will consider you will get to see what we are doing in the March fact sheet. So right now, I think financial services, especially private banks, few private banks having a good ROAs, and IT companies, I think that is the two sectors which we should be looking for next area of growth. So these are my active bets versus my benchmark. So healthcare, I am bullish. So why am I healthcare in bullish? That we are holding Divi's Lab and Sun Pharma. We are bullish in Divi's Lab. We are holding around 7.6% position. We think it is one of the best CDMO player. For the China Plus One place, it is as a global pharmacy supply chain diversification, and their Kakinada expansion adding nutraceutical capacities, which is a high margin product, which can generate a strong free cash flow also. So Sun Pharma, US specialty business, and that is absolutely going. The very less US FDA repercussions. Halol and other facility has been cleared by US FDAs. We have a very small portion in Apollo Hospital because we think that people will be using Apollo Hospital as the wellness part, also a treatment also, and also the Apollo Hospital has started to come at the good valuations over a period of time. So all the hospital for next 5 years, they are already commissioning their capex. They are increasing their beds also. ITC, this is my conviction holding. I'm sorry to say, if somebody smoke a cigarette, it's very difficult to quit that habit. Like it takes courage to quit that habit. So it has an irreplaceable pricing power. People who used to have a 12 rupees of cigarette now having a 20 rupees of cigarette. So it's a regulated monopoly, and it's huge pricing power. And also their FMCG part, other FMCG part, which has a paper and biscuits and noodles and other things, they are also gaining the EBITDA traction. So these are the things which I have already spoken with you. Mazagon Dock, which is a sole bidder of the submarines in India, they have done their partnership with Thyssen Group also. So we have a little exposure in defense also, like Mazagon and Solar Industries. We have a exposure in media and entertainment. We have a position in DLF and reality also. So over a period of time, you can see that how we have placed our bet. The most money we made as a fund manager, I can tell you the most money I have made in last 1.5 months by not putting money in construction, by not putting money in IT, by not putting money in metals and mining. So sometimes if you're not investing and still you are making the money, so you need to sometimes take a back seat, and you need to see that I have to remain aloof from others. I have to put many things in abeyance, and I have to see that how I can progress further. So there will be a requirement of coal. So many people think that Coal India is the metal stock because it comes in the BSE metal index. But Coal India we classified as a oil and gas and other consumable fuels. So we have a good exposure in Coal India. It gives a huge dividend. It gives good upside potential and very limited downside potential. So I think that over a period of time, there will be a requirement of energy and all the things. But I really want to see that how this disruption will close to the end and how we subsidize from this constraint or from this disruption of LNG and LPG. So mostly these are the rationales for our top picks we have in our portfolio. And we are holding around, as per the February fact sheet, we are holding around 11% of cash as well. So we are not, I would not say as a mutual fund manager, I would not say I'm bearish in the market, but I'm mitigating my risk. Whenever is it down, I used to be a risk management person. So for whole like 14 years, I have done only risk management, and then I started the investing part. So mainly when it comes to risk management, so I keep myself away from all the noises, and I seek to understand that over a period of time, what could escalate and what could impact our portfolio. And that is how we have come from last 8 months. We have come from 27th rank to today. We have ranked 4 on 1 year and rank 8 in 3 years. So I think we have done reasonably good job. All is God grace. What we have done nothing. So we believe in the process, and I will show you what is my process also. So this is for our distributors and clients also. They should understand how our thought process, what is our process. We are not after the rank. The rank and the returns comes as an outcome of the process. So please understand that we are the process oriented AMC. So all the things you can see that we have written all the rationales for all the each and every stock we are holding it. We have how we are doing the analysis and how we are writing the rationales. These are the very small rationale. Let me tell you, you will need another 10 pages slide for each stocks also. So why invest in large cap fund? So this is our process. So this is we have a number of holding is 33. This is BSC X banks. So these are the ratio because we need a different ratio for the banks. So for my large cap portfolio, these are the 7 valuation multiples. One is profitability. That profitability includes the ROCE, return on the capital employed, gross margin, OPM, which is operating profit margin, net income margin. That should be greater than our benchmark. So if I'm actively managing, then that should be greater than my benchmark. And generally, this process will take time to show their outcomes. So definitely, it generally takes, for the large cap fund, it generally takes 6 to 8 months. For the mid cap fund, it generally takes 15 to 20 months. For a small cap fund, sometimes it takes only 6 months, but sometimes it takes around 18 months as well. So this is how we are maintaining. My ROCE should be larger than my benchmark. I'm holding the scripts I'm holding. The gross margin is better than my benchmark. My operating margin is also better than my net income margin is marginally good than my benchmark. Free cash flow is something which I watch for. So I always remain that anything which impact my free cash flow margin should be out from my portfolio. So cash conversion ratio is also good, and the risk ratio, which is a leverage ratio, so it should be lesser than the benchmark. So benchmark hold around 2.4% of leverage ratio. I hold around 1.6%. So this is the process that I follow. And accordingly, for every quarter, we understand these are the FY27 end figures. We are estimated figures, and accordingly, we have built our portfolio. But every quarter, we does the analysis on our estimation with consensus. We seek how the Indian research analysts have given their estimated, where we have failed, why we have failed, why we have succeeded, what is the probability of getting a more success, and what is the probability of getting our estimations right. That is, we do on the every quarter basis. Anything which doesn't suffice in our process, it should be get out. If it is suffice in our process, then we should build a conviction and we should build a higher position. And that is the outcome. For the 1 year, we are beating the the category average. We are beating our benchmark. Okay, this is today's data, 18 March data. This is for 3 years. We are again beating the benchmark and we are beating the category average also. So this is one should looking for that what is the thought process behind portfolio management. So these are the riskometers for Taurus Large Cap Fund. And this is the disclaimer. Mutual fund investments are subject to market risk. Please read the scheme information document and as a statement of additional information and key information memorandum carefully before investing. Past performance is not indicative of future returns. Returns are not generated and investor may not get back the amount invested. The returns are not guaranteed, sorry. So, Prashant sir, I'm done from my side.
Thank you, Energy. So we are open for questions. If anybody has any questions, they can unmute, maybe put it in the chat box or on the Q&A section. We'll be happy to reply.
I hope the presentation was worth of your time. Your view in gold and silver purchase now. Matthew sir, right now I am not bullish in gold and silver. It may go up, but as a mutual fund investor, I'm a long-term investor. So basically, if we take a position, we take very less of tactical position. But right now, I'm not bullish in gold and silver.
Hopefully, I don't think any others have any other questions to ask. Thank you all for joining in. You will be receiving a Google form wherein you can give us a review. Or maybe you can write down as well what went well, how can we, change the presentation. Maybe that will help us to deliver much better in the next training or a webinar. Thank you all. Thank you all for your time. Thank you, Anu sir. Thank you, the entire Taurus team. Thank you. Thank you.
Thank you. Thank you for having me, Prashant sir, and given me an opportunity to speak to all the attendees. And I think if anybody wants me to ask anything, he can reach out to their salesperson or to Mr. Prashant Kumar, who is our national sales head. Each and every region has been a salesperson is already been assigned. I would love to have your questions. I would love to interact with you at any given point of time. I'm available for my investors and for my distributors. Please let me know. And also let me know how can I more improve with facts and figures. We can put more juice in the presentation. So thank you guys. Thank you so much. Happy weekend.
Thank you. Thank you.
Thank you, sir.
Thank you. Thank you, Rajesh ji.